Hi guys, welcome to another episode of Stocks and Focus. So for this week over here, we're going to talk about a few things in this particular episode. Namely, number one, we're going to talk about ARK Invest and Cathie Wood. If you're looking to invest into that, what do you need to take note of? We're going to talk about the second thing is on Tesla, Elon Musk, and of course the recent tweet that's happening right now on Dogecoin. And the third one we're going to talk about is on Apple, right? And what are some of the key opportunities that you want to keep an eye on moving forward, and why Apple is a solid company that you want to definitely pay attention to if you are actively investing into the US stock market. So without further ado, I'm going to show you my screen, and if you watch all the way to the end of this video, you actually figure out why I'm personally investing into Apple and what are some of the key levels that I'm looking to get involved in. And without further ado, let's dive into my screen and we'll look at to some of the information I would like to share with you. Okay, so first off, let's talk about Cathie Wood and of course ARK Invest. Okay, so I think recently, in the recent times, I think most of you who are actively in the finance market, in the stock market, you probably already know who Cathie Wood is. You probably heard of this name called ARK Invest ETF. Okay, and their performance has been very solid since they started and launched the ETF. Okay, so over here in this article, I would like to share with you from a different point of view why you want to be cautious. Okay, as the title here also suggests, Cathie Wood has Wall Street's hottest hand and maybe a little bit too hot, right? In other words, you need to have another perspective. Okay, it's like the devil's advocate over here. While everyone is talking about the positive thing on ARK Invest and Cathie Wood, there is certain things that you definitely need to take note of. Perhaps the media is not really presenting this point of view, okay? For whatever reason it is, but I think as an investor, you need to have a balanced point of view, okay? And this article actually brings up very good point, and I think it's important that even if you're not interested in Cathie Wood or you're not interested in ARK Invest, it provides some good insights generally from the financial market point of view as well. Okay, so a quick one over here. Why has ARK Invest been so popular recently? Because since its launch in 2014, it has averaged a return of 39% annually. That's crazy, right? Because if you benchmark it to the S&P 500, the average return on an annual basis you can expect is about 8 to 12%, but ARK has did it since 2014 when it launched an average return of 39%, right? And that is a lot, okay? And of course, over here you can see as well, it states that ARK Invest ETF actually managed a total of about 11.4 billion at the end of March 2020, but by the end of year last year, right? It has grown to 58.2 billion. That's huge, all right? And this is the part where I want you to then know that as the fund gets bigger and bigger, okay, there's of course the advantage and the disadvantage of it. And if you have been following Warren Buffett, he did mention this before. If you're small in terms of your funds, right, you do have certain advantage, right, where you are more nimble, you are more agile, you're able to enter and exit the market accordingly without much difficulty, right? But when your fund starts to grow, you can literally move the market, and you need to take aware of it and take attention to that, right? So what I want you to then be aware of is that as ARK Invest continue to grow its fund, okay, it will reach to a point where it might not be able to hit its annual average return of 39%, right? And that's where it will cause quite a bit of misalignment in terms of expectation for many investors, if that's what they expect, or if that's what they are not aware of. Okay, similar things over here is that if today you are looking to invest into ARK ETF, thinking that you'll be able to average a return of like 40% annually, okay, you want to have that expectation, perhaps bringing down it a little bit lower, okay, because as the fund keeps growing, unlikely it's able to perform again as high as what it has been doing. Okay, now another thing perhaps you want to keep an eye on for ARK Invest is that most of its investment in companies, they are relatively small companies, right? And over here, this is the one that I'm talking about. Okay, this is just one example that's listed in the article. It says that actually ARK holds a pretty significant proportion or percentage of the companies that they invest in. Okay, now there's good side to it, and of course there's also the negative side to it. The positive side is, of course, if the company grow, then ARK investment would be growing pretty well. Okay, but at the same time, you want to understand that if this company doesn't perform well, then basically it's stuck, right? ARK Invest is stuck in those positions because they own so much of it. Okay, so over here it also brings there's an interview. Okay, so this article also talks about it, how, you know, if there is a situation where suddenly the retail investors starts to pull out their investment out of the ETF, what will happen, right? And this is something that, of course, Cathie Wood, as a CIO of this ETF, okay, need to definitely pay attention to it and take note of it. Okay, and the interview, Miss Wood or Cathie Wood actually kind of like give that response. It's not something that is very to me, right? It's not something that is very I wouldn't say I would accept it. Okay, but perhaps she is, from a PR point of view, doing her role to provide that conviction, that confidence to the retail scene, right, to fellow investors. Okay, so she actually said over here that, hey, ARK is right now diversifying into larger companies, and this reason is because then when there's a downturn, okay, especially in those smaller stocks that I talk about, they'll be able to liquidate their position on the bigger companies and use those cash to pump it into the smaller companies itself to kind of like support the floor, right? Kind of like prevent the price from falling too deep. Now, to me, that is not really a good answer to how ARK Invest is gonna kind of like manage the possibility that when a lot of investors are pulling out their funds. Okay, so over here, I was on social media and I saw this photo as well, where you can see, you know, the idea here you need to take note of is the term called liquidity. Okay, so when everyone starts to exit the market, okay, there is certain condition where certain positions or, you know, certain people can't exit on time because of liquidity in the financial market. If today you want to sell something, you need to find a buyer, right? And if everyone just wants to sell and nobody is willing to buy, okay, that's where you get that huge drop or the crash coming in terms of price. Okay, so you want to take note of that, and you know, if you're investing into ARK, you need to be aware that there might be a crunch, a liquidity crunch situation. Okay, so just be aware of that as well. Okay, so this is something that I think is important for all investors to understand and take note, especially if you're looking specifically to invest into ARK Invest. Okay, now another one that I would like to talk about that's happening right now is you know, Elon Musk and Tesla and the crypto scene. Okay, and this was just today. Okay, and basically he tweeted again that Dogecoin is underestimated. Now, this is something that you want to take note of, because if you are following, or I would say you're basing your trades on what Elon tweets, you're basically very risky, right? And I'm not sure why Elon is doing that. Perhaps it's riding on the whole social thing. Okay, but at the same time, you want to understand like what's the usage of Dogecoin. Okay, maybe Bitcoin, yes, there's certain value to it. You know, the future outlook of it is good, but so far right now Dogecoin has nothing. Okay, and it's really just a collector item. And if I were to put that similar context into like some other things that maybe you can relate to, it will probably be just a collector's item, right? For example, Mona Lisa. Okay, some people who appreciate art will give a very high value to it, but if you get someone who doesn't really appreciate art, it's worthless. Okay, so same thing as like some collector's item, for example, maybe like Pokemon cards, right? If you're a Pokemon fan, then those cards worth a lot of money. Okay, but if you're you're someone who doesn't really care about what Pokemon is, or you have no idea, or you're not interested in it, there's zero value. Okay, so same thing here. As of this very moment, Dogecoin is basically a collector's item. Okay, so if you are looking to invest and trade into it, be aware of the potential risk as well, which means that it literally can go stagnant or even drop to zero when there's no interest. Okay, so a collector's item, basically the price is fluctuating based on the speculative value that people give to it. Okay, so I want you to quickly take note of that. Now, the last piece over here that I want to cover in this particular video is about Apple. Okay, and I think this is very interesting because I've been sharing with our community of traders and investors that the next up and coming trend would likely be in the AI industry. Okay, artificial intelligence, and of course that includes like your self-driving vehicles, drones. That's also including like your EV, your new battery technology and things like that, right? And the two companies that I mentioned before is Apple and the other one Microsoft, because I believe that these two large companies has the capacity and the resources to really ride on this trend moving forward. Okay, and with the recent news about how Apple is potentially looking to get involved in the EV space, all right, you can see it as a competition to Tesla. Okay, but I feel that Tesla is definitely way ahead right now. Okay, but you want to pay attention to how Apple can penetrate this market as well. Okay, just take a look at how Apple introduced its iPod, introduced its Mac, introduced its MacBook. Okay, and of course subsequent products, right? Apple branding doesn't only come in as like, oh, I'm better than this technology and things like that, but Apple branding becomes more of like a lifestyle. Okay, so when you are a fan of Apple, nothing else really matter, right? So some of you out there who are maybe Apple fans, you understand this, right? Whatever phone that comes out that's not iPhone, you don't really care because you're a hardcore Apple fan. Okay, and that's what Apple is able to do. Okay, so when they enter into the vehicle space, perhaps they'll be able to compete with Tesla from a different angle. Okay, maybe it becomes like a lifestyle kind of like message that if today you drive an Apple car, you know, wow, you're different, right? It becomes like a social league as well. Okay, so that's what I see from Apple. It's no longer just about technology. Yes, they do have the capacity to create that kind of disruption and innovation, but at the same time their marketing, their branding is very, very strong. Okay, so over here definitely you want to pay attention to that. I think there's a lot of developments still ongoing. It's not like set in stone. Okay, so this project, Apple call it Titan, you want to definitely keep a very close watch onto it. Okay, and over here I want to show you some of the charts as well from a technical point of view. What are some of the price point that you want to be keeping a very close watch to? Okay, now in this video I'm not going to go through like the fundamental, the valuation of Apple. I think that's pretty solid. Okay, if you have time, you can do your own fundamental valuation. Basically Apple is just undervalued, right? From a dividend point of view, it's undervalued. Okay, if you are taking a look from a fundamental point of view, you cannot put in your value investing methodology, right? Simply because if you do that, if you base on DCF, you base on Graham's number, it's that a technology company is always going to be overvalued. Okay, so you need to have a different approach to put the valuation to it. Okay, so I'm not going to go into that in this particular video. Okay, but I think if today you know you use Apple products, you at least know this company, and I'm sure everyone does. Okay, okay, you know that the fundamental of this company is strong, right? With the cash position and things like that. Okay, so on a technical point of view, okay, there are a few price points you really want to keep an eye on. Okay, I would say that let me put this in as well. Okay, so from a stocks point of view, sometimes it's good to put in your volume profile. Okay, to understand where is a key area of activity. Okay, so that it is. So right now, straight off from this chart, I think there are two key zones you want to keep an eye on. Okay, the first price point here is somewhere around 114 or about $115. I think that's a very good level to keep an eye on. Okay, if you base it on a fit level, I think $120 is also a key zone to keep an eye on. Okay, and if this zone here breaks, okay, then the next level you want to keep an eye on is $103. Now, is there a possibility that Apple can drop so far towards the downside? That's about like 25% drop. Potentially it can, because that was what it did in March last year, right, it drops by about 25%. Okay, but of course, because it's a strong company, the fundamental is good. It rebounded back almost quickly within a year, right? It breaks all-time high here as well. Okay, so the part here is if you're looking for a long-term investment into Apple, okay, then that's where you want to keep a focus on this two key zone. Around $120 to $115, okay, that's your first potential level that you might want to accumulate a bit of it. And the second level here is about $103. Okay, so for me, usually, when I'm looking for a long-term investment, I won't go in everything, right? I won't put my whole position in just one price point. So what I'll do is, for example, if today I'm prepared to invest, let's say $1,000 into Apple, what I'll do is I will break it into tranches. Okay, so this is something perhaps you want to consider as well if you're looking for investment. Now, let's say I would like to break it into 3 tranches, which means that, I will give myself 3 bullets to fire into Apple stock. Okay, and if today I'm prepared to invest a total of $1,000, I might break it into, let's say, like the first area here, I'll put in like a 20% position of it. Okay, so 20% out of 1,000 is $200. So I'll perhaps use $200 to get into Apple when the price hits about $120. Okay, now if it continues falling towards like 103, okay, then maybe I'll pump in a 30%, my other 30% into Apple. Okay, so I'll use $300 out of the 1,000 to invest into my second position. So in total, I would have invested like 50% of what I want to invest by the time price hits about 103. Okay, so that's like $500 invested into Apple. Now, if price continue to fall towards like $90, which is this zone here, then I'll put in maybe another 50%. Okay, so in total, I'm prepared to invest $1,000 into Apple, and I break it down into tranches. Now, the good thing about this is, of course, if Apple don't correct so deeply and it only comes down here and starts to bounce, at least I have a pie in this entire move, right? And the other good thing about it, by breaking down into tranches, is that, of course, if the market starts to crash, okay, I would position myself in a much better. So it's more like the concept of averaging down, okay, but it's a properly planned approach. Okay, it's not like based on emotion, I want to revenge, I want to recover, and then I enter. No, right? When you're doing this, when you break your position into tranches, you are basically having a proper plan. Okay, and that's how, if you want to do average down, you should be doing it this way. Okay, so that's something that I thought I would like to cover in this particular video over here. I understand this is a little bit lengthy, but I would like to cover what's really happening out there. Okay, and I think right now the 2 hot stars to keep an eye on is, of course, Cathie Wood, we talk about it, and Elon Musk, right? And over here, of course, Apple is also presenting a very solid opportunity. Right, so with that, I do hope you enjoy this video. You do take away some value from it. Okay, whether you are someone who is actively trading in the stock market or you're looking to invest into it, I hope this video provide you a slightly different insights and perspective, and I'm able to value add in your investing journey. Okay, and of course, would really appreciate if you could give a thumbs up to this video. If you're not subscribed to the channel, make sure you do that so that when I release new subsequent videos related to trading and investing, you'll be notified as well. Okay, and if you're looking to invest into Apple as well, drop it in the comments below. Let me know, okay, so that we are able to track this together. And let me know if you already own Apple shares as well in the comments below. And of course, if you have any questions, feel free to put it down there as well. I'll monitor them and answer your questions accordingly. So with that, I'll see you guys in the next episode on Stocks in Focus. If you have any particular companies or particular instruments that you'd like me to share my point of view on in relation to the stock market, feel free to let me know. Just simply put it down in the comments, and I'll be able to look at them. Right, so with that, all the best to your investing journey, and I'll see you guys in the next episode.